Hi, it's Brian Thomas, host of the 55 KRC Morning Show, putting my insurance cap on for another edition of Rethink Healthcare together with John Ruhlman from Cover Cincy, and I thoroughly enjoyed doing this segment with John. I've learned so much over the multiple times we sat down and talked, and wow, what an amazing thing last week with Kristen, owner of Sweets and Meats. Man, and listen, folks. If you are like a food truck owner, you got like 10 employees or something, and you know you cannot afford insurance for them. Yes, you can, and you're going to be able to retain employees, and you're going to draw them like a magnet because John explained in detail with Kristen, beaming and happy as she can be, about how her employees now have medical and dental and life, and it's not costing her more than a couple $100 a month with $1 coverage up front, with the tax credits that the employees get because of the amount of money they make. That covers the nut on their major medical policy. So they got across-the-board coverage that they never could have even thought of affording without you.
Yeah, they have the first dollar coverage that's now provided by the employer. They have the catastrophic piece under their major medical. And most people, I hear all the time, listen, I don't really want a marketplace plan. I don't want one of those Obamacare plans. I said, imagine having an Obamacare plan, but you also have the private plan with it.
That's the upfront coverage. That alleviates that concern people have about $3,000 or $4,000 out of their pocket, which they can't afford because we're talking about folks that, again, we're not talking about like people making $100,000, $200,000 a year. You're talking about people making $30,000, $40,000, $50,000 a year.
Absolutely. And think about it this way, too. It's also a tied-in potential disability benefit. So that person's laid up in a hospital for a while. That secondary coverage keeps paying, even once they've met their out-of-pocket. So that could be thousands of dollars per day put in their pocket while they're in the hospital.
And again, we're talking about situations where you have small businesses with employees that aren't making a whole lot of money, and maybe the owner isn't even him or herself making a tremendous amount of money, getting better coverage than you would get working for maybe even like a Fortune 500 company.
Yes, because no one provides first dollar coverage, Brian.
Nobody.
No one's doing
it. You do. Cover Cincy with y.com. The number is, we're going to do this again, 800 call. It's 513-800-2255. Cover Cincy with a Y or I. Either way, you owe it to yourself to get in touch with John because he can do this for you too. And one thing I thought it was rather interesting, the subject matter today, we're moving maybe not away from medical coverage, but you wanted to talk about life insurance.
Yeah, it's that time of year. We start seeing a lot of big illnesses this time of year for whatever reason. We start seeing people going through cancer and heart attacks. I have thousands and thousands of clients. We lose clients every year. For some reason, I don't know what it is about the beginning part of the year, but we start really seeing it around now. And so it's more of a conversation.
It's tax season.
Tax seasons, I guess. Is that where the stress comes in?
Maybe.
It gives them, that's terrible.
Failing in keeping your New Year's resolution, which is really only a month and a half old, right?
All those guys just started going to the gym.
The reverse side.
Oh, I know.
Your New Year's resolution kills you because you decide to get on the treadmill.
Yep.
All right.
But, I've really made a big conscious decision here recently with my agents to start talking a little bit more with our clients about life insurance because we're finding out it's just like anything. If we don't have the conversation with them, they're not doing it, or they're then trying to go find somebody else to put trust in, and most of the time they end up overpaying. So what we're doing now with every person that we talk to, our goal is to just say, hey, what is your current life insurance situation? Because I'm shocked to find out how many people don't have it, have very little, or just have a complete misconception of what it's even all about. And that's why I wanted to really talk about it today, because I think it's so important to have it for not only your family, your kids, or whatever your goals are, but even as a business owner. If anything happened to me, I have business debt and own an office and payroll. There's just so much coming through. So I made sure that I have enough life insurance. Anything ever happened to me, my business is taken care of, my family's taken care of, my employees are taken care of. That was a very important piece for me. And I made sure of that with life insurance. So again, we'll talk a lot about the different options.
Do your employees even know that? Because when I've interviewed for jobs in the past, and it wasn't one of the things like, do you have insurance that's going to cover the entire business so that I am taken care of after you drop dead at some point? Am I still going to be able to work here? I've never heard anybody even think about asking that question.
I don't think they do, but it was something that I've always thought about.
All right.
It's something that makes sense to me because, I have employees that work with me for years.
What, do you have ethics or something?
Well, I look at that. As an employer, yes, I write a paycheck and they're working for it, but their family, their livelihood
Yeah.
relies on what I'm being able to do. If my business goes under, I'm hurting them. If something happens to me, I'm hurting them. So yeah, I mean, I look at all those things because
That's
it's
great.
important.
Well, most people just consider, like if they're here, they're talking to you about medical insurance, which they should, that, here you go, he's going to try to upsell me on something. Here we go, pivot now, and we're going to upsell me on something. But it's a critical component in the package of taking care of yourself and your family and of course, as you mentioned, your business.
Yeah, and we're gonna show some of the new concepts with life insurance that will really show you why you should think about this as a healthcare potential option for you as well. But one of the things I really want to kind of stress here, because I mean, there's a lot of information out there. There's a lot of misinformation. People try to sell you all the different types of fad new life plans and different things like that. But really, you're just kind of breaking it down. How life insurance, I feel, should be utilized. And you have like these things like term insurance. You have whole life insurance. You have these index universal life policies that are like the new big fad that everyone's buying into, which makes sense in certain situations. But if you're younger, maybe starting a family, have some kids, or of course, if you just took out a mortgage, right, or have some debt, right, the easiest thing to buy right away, the first thing I would do is get the term plan. They're very inexpensive,
especially for a young, healthy person.
Oh yeah. I mean, the misconception is unbelievable. Actually, one of the pages that I had here was like just kind of like a chart that showed from a national article we just saw on Forbes that just came out in January. And this, of course, is averages as far as the cost. But, if you're in your 30s, and again, I would say for most people, $500,000, $1 million, they might think, well, that's a lot of money, right? But let's just look. No, it's not. No, it's not.
No.
I mean, because we use an acronym when I talk to clients, and it just makes it very easy to kind of think about life insurance as far as, what should I cover? And we say you can run from life insurance, but you can't hide. So HIDE's the acronym. So you want to cover your house, you want to cover your income, and when I say income, it's 5 to 10 times that. Right? If I'm the primary breadwinner for my family and I pass away, is my goal for my family to completely change their lifestyle? Like, oh, sorry, Dad's gone. We're not making any money anymore.
Sucks to be
let's no more going out to dinner, no more doing any of your sports. My daughter does competition dance. Like, you can't do that anymore. There's no income coming through. So I want to make sure that's covered. So the goal would be cover your income 5 to 10 times. So if you're making $50,000 a year, you need $500,000.
Right.
$250,000. Add on the house, the mortgage, what you're paying.
Smooth over the transition.
Whatever other debt you have. I mean, how many people have student loan debt? Probably still into their 30s, maybe even their 40s.
Wow. And that, that's a heartbreaking subject right there.
I know. But that's a way that you can eradicate that right away. And then, of course, I look at it this way: education. Right? I have 3 kids. I know what college costs. I mean, I know what it was for me 20 years ago. It's almost double that now.
Yeah.
Right? I mean, what do they say? The average is like $40,000 a year.
Yeah. Well, thank God my son quit college because it was he said it was a waste of his time. He was in computer science up at Ohio State, and he just quit. Like, what happened? He goes, I teach myself this stuff. I don't need to sit in a classroom, some bonehead professor yawning on about something that has nothing to do with what I want to learn. I mean, he's self-taught kind of kid, but he saved me a lot of money. I had to pay for college for him, but my daughter got 4 years plus a master's degree, so that was a different end of the spectrum.
My 11-year-old told me the other day, she goes, "Oh, Dad, I'm thinking I want to be a pediatrician."
Oh, there you go. Okay.
So when I said I get some more, I need some more life insurance.
8 years, and then maybe a couple extra if she wants to specialize. Or anyway, but that's what you got to think about.
But the point, you're absolutely right, that you have to think about it, and the real point is that it's not very expensive. Like, for a 30-year-old, the average for a $500,000 policy, and this is a 20-year term. You don't want to do one of these things that you see the quotes that are running around there. They're like 10-year terms. That's not good for a 30-year-old, 40-year-old, even 50-year-old.
Because you have to go through underwriting when that one term, when the term is over.
Well, there's a big misconception on that. I can hit on that real quick while you brought it up. But the term doesn't end. So just because you have a 10-year term, you're now paying the full price of the 10 years later. So it'll keep escalating in premium. So if something's
going, a locked in premium though, if the longer.
The term is yes, but if you exhausted your 10-year term and now you're in your 11th year, you'll just pay a higher price. The policy will still stay in effect.
Right, but it's the higher price you got to worry about.
Correct, and that's why hopefully you're healthy enough at that point to reapply and get another policy.
Mm-hmm.
And that's, some people don't even know that. I have people that I run into that are completely healthy. Like, well, I've just been paying this higher rate every couple of years. I don't know why it keeps going up. I'm like, your term ended 2 years ago. Let's really lock that in and get you a better price. But, kind of going back to a 30-year-old for that $500,000 20-year term, I mean, it's like $200 a year.
Don't lie. A year?
A year. Yeah. It's average annual rate for a man is $221 a month. I'm sorry, $221 a year. That's for the year. That's annual rate for
nothing.
$500,000. No, I mean, because the likelihood,
yes, still that much throughout the year, even if you're not a high income, person.
Yeah, it could be your going out to dinner that month or that week. There could be your lunches. I mean, now you have $500,000 in life. It's not expensive. It really isn't. And I look at that as being the most important thing is saying, get a really big life insurance policy to cover that HIDE acronym, and do that while you're in your working years.
All right, so okay, my daughter and her boyfriend Eric are ready to buy a house.
Yeah,
they're probably going to get married. We talk about it all the time, so it seems inevitable. Doing the exact same mom and dad did: buy the house together, get the dog, and then get married. So that's what's going on. But they're both young. They're both very healthy. 28, 27, 28, 29 years old. They can get policies for 30 years. Locked in
30, 40,
and the premium will stay regardless of what it ultimately is. Yep. Maybe $200, $250 a year. And it'll be that way for the next 30 years.
Yes,
that's awesome, right there.
Yeah, and maybe $1 million. I mean, especially with the housing market around here.
No, I get it. I get it. No, I'm whatever they end up getting. You're talking about what I would think would be the monthly premium.
No,
for a full year.
No. I mean, maybe if they're 60 trying to apply.
No, that's a different story, though.
Yes.
That's why you do the 30-year thing, because by then, if you have kids, presumably they've grown up and moved on and out of the house. You don't have to worry about that. You got enough socked away to cover for your funeral expense or whatever. It's no longer a necessary commodity. College has been paid for already by then, right?
Yeah.
So these things hanging over your head as young people have gone and disappeared, and you don't have to worry about renewal. And if you want to pay the extra premium to extend it, fine. But I mean, just to know that it's that cheap for that long a period of time, it's just mind-boggling to me.
When I started this 20 years ago, my brothers had just turned 18. So the first thing I did with them, I sat them down and I got them a life insurance policy. I was you're 18 years old. Let's get you. I'll even pay for the first year. I was like, but you're going to pay after this, and I'm going to get you set up. And now they're married, they have kids, and guess what plan they still have?
That's
a little
awesome.
Life insurance plan I set up for them 20 years ago on a 40-year term. So not worrying about it.
A 40-year term.
Yeah, it was a 40-year term, 18. They're going to need more, but at least they had that. And actually, I did a whole life policy for them at that point.
Do people still buy whole life policies?
You used to buy some whole life policies, yeah.
What's the benefit of whole life? Because my understanding, the premiums are usually more.
A lot more. There is cash value, but it also lasts your whole life. So one of the things I kind of mentioned on the term side, do a higher amount, cover those working years. But then you can have something that lasts you the rest of your life. Because there are, unless you're in a situation where you got a lot of money socked away, something happened to you to help with probate and transfer of assets and all that type of stuff. Not everyone does. The average American doesn't have $500 in a savings account. So he's not leaving his assets to his kids. They're liquefying them.
All right, well, explain this in a way for me, because this has been puzzling me for a long time. My wife, when we started going out, she was paying into a whole life. I think it was Mutual of Omaha or some nonsense like that. It was like a $50,000 whole life policy. And every time I wrote the check for the premium, it was like, this seems like an outrageous premium. And the point is, it's all going into a big pile of money. But when we decided, because she had a much better term policy to cover us through these years that we're talking about with the kids and the house and the mortgage and all that kind of stuff, it seemed unnecessary to continue down that road. So we just liquidated the policy. Zero return on investment. All you got was basically the premium dollars you paid in. I always thought, well, had she been socking away the $1,000 or $1,500 or whatever it was on an annual basis in an investment account, she would have been a hell of a lot better off, because she would have gotten maybe 8% return over the whole time she had it. This was a $0 return. She lost money, effectively, the time value of money, the investment value of money, by parking it in this life insurance policy.
Yeah, that could have been that case of that plan that she purchased. Some of them are like that. Some of them do build very good cash value. And if you're really more interested in something else along that line, look at the index universal life policies, where you basically have a death benefit that's a lower end if you're working with the right agent. But it can work the same way. You're indexing it to something like the S&P or You know?
Okay.
And actually, you can get good growth on them. So a lot of people are really using those type of life insurance policies right now. But again, not really always a thing that I stress for clients right at the get-go. I mean, my main goal is just to have something on you right now, making sure that makes sense if something does happen.
Well,
But
when you're talking that low premium for on an annualized basis, that to me is just like a no-brainer. Again, you spill that much throughout the year, add up all the Starbucks you bought or whatever, and you're probably going to exceed the couple of $100 you can get for some real peace of mind.
No, you're absolutely right. And like I said, a lot of people probably listening are probably like, well, listen, I don't know if I really need life insurance. I'm good. I'm young, which of course is the time to buy it. But this is kind of where I want to take it to the next level, because everything that I always wanted to approach is there also an extra benefit tied in here that you could actually use? Again, we always look at life insurance, and that's going to go to some other beneficiary, right? I'm buying something I'll never see, right?
Yeah.
But the unique thing is you're starting to see a lot of these insurance companies get smart, and they're offering some really good riders. And the biggest rider that I really stress with these policies is the critical illness component, because we talked about it, even the first part of the show, a lot of clients going through cancer, heart attacks, and different things right now. So imagine having a $500,000 life insurance policy that had 100% payout if you got diagnosed with cancer, or if you had a heart attack or a stroke, or end up having to do an organ transplant.
So they consider that like a death event, in essence?
They would be a payout like a death event, but you don't have to die. It's an accelerated benefit that like literally pays out on the event of a critical illness. So, if you
it's like having a double indemnity provision. If under certain circumstances you get double the benefit,
like an AD&D policy and stuff like that.
There are terms within the life insurance policy. Okay, if you die, obviously you're going to get the face value of the policy. Right. But if these events happen, you're going to get this amount of money just right up front.
Yep, you can get right up front. And that's a huge benefit, because you look at what these major illnesses are going through. Again, like I said, a lot of my clients are small business owners. A lot of my clients don't have sick time, vacation time, they can't file unemployment. So what happens when that guy goes down for 6 months and he's battling cancer? Right?
That's hard to, yeah.
What
do you do?
What do we do? I mean, exactly. You have to have either the insurance to pay you, like a disability program, or to hope somebody sends up a GoFundMe page, right? I mean, that's what a lot of people end up going through. So that's why I'm telling you is, even if you have an older life insurance policy, it might be time to rethink it and say, hey, maybe I should look at one of these newer plans that have a higher likelihood to pay out, right? Because regular life insurance only pays if you die, right? And then what's the likelihood that someone gets cancer before 65? It's 1 in 3.
Yeah.
1 in 3 people, especially like females and men, like between 50 and 65 will have cancer.
Oh, you're looking at me.
I mean, exactly. It's a crazy, crazy statistic, and we're seeing it escalate more and more every year. So if I have a chance of 1 in 3 to get a couple $100,000 payout on my life insurance policy, I don't have to die, that's a plan I'm buying.
Yeah. Must be either something in the water or something in our diet.
Maybe the ozone.
The direction of health in this country is not going in a positive direction, if you know what I mean.
Well, we're also living longer, right?
Well, sure. Go ahead and say that. But how are young people getting more and more cancer diagnosis at a younger day? I mean, you got people in their 20s getting colorectal cancer. Like, that never happened before, right? It was an anomaly previously. Now it's becoming more and more thing. Lord knows what the genesis of the problem is, but obviously the point being, since the statistical likelihood of you getting it at some point has gone up significantly, the idea of having something to cover you and pay you real time while you're alive, sounds even more and more like a wonderful thing.
It's like I said, it's all about
Larry. I can't wait to get cancer. I'm going to get a check for $500,000 from a life insurance company. No, you're not going to say that, but at least it's going to be there in case.
And when my clients have that and they call in, they're like, hey, I'm going through this, then I need to make sure I have all my ducks in a row. I'm like, well, first thing we got to do is we got to get you to fill out this paperwork because you have a $100,000 policy for this. And they're like, are you kidding me? I completely forgot I had that.
Yeah.
I mean, that's usually how the conversation goes. They don't remember that they have purchase because they just see the package like, oh, it's all in here, and
life
they don't know that
it says $1 million right there.
That's
I guess
right.
That's what I'm gonna get when I'm dead.
Like, no, like, ma'am, you're getting $100,000, and we're gonna get it in your hands within the next 30 to 60 days. So you just go through your cancer, go get your treatment, and don't worry about your bills because you're gonna have this big check that's gonna be coming to you, and it changes lives. I mean, more people file bankruptcy first off for medical debt than anything else.
Yeah.
And here's the kicker. Most of those people had health insurance.
That's the hard thing to believe.
It is, because most people will file it for $10,000 or less. So they're going into financial debt and they can't afford to get out 10 grand. And then, of course, if you have a long-term diagnosis, God, if it's over years and years.
Oh yeah, because
I mean,
every
that's
year
10
you got
grand
a
a
new
year,
out-of-pocket
10 grand a year.
liability. Oh,
And if that's, I mean, some people that could be 25% of their income. So, I mean, now they're not working. It's a snowball effect, and we see it all the time. And that's why I always say it's good to plan early. So especially with your daughter, I mean, that would be planned early. Good conversation to have, get it locked up, and don't even worry about it, and get it for a great price. And that's why I tell everybody. I mean, my kids even told me, go, Dad, the first thing I'm going to do when I'm turning 27 is I'm going to get my own health insurance policy. I go, why? Why should you do it? Because you listen to my shows. They go, because I want to own something that I own. I'm not leasing my healthcare coverage from some boss in the future. I want to own my own thing.
That's the flip side of our conversation with Kristen the other day.
Yeah.
Because she gets long-term, I never want to leave my job employees because they're not high-income earners, but they get this huge, valuable benefit that nobody else in her business is going to offer. In his situation, he's got screw you money. I don't need this job, baby. I can leave anytime I want because at least I know I've got my medical and I've got my my life. And
opens up the area of possibilities for you, doesn't it?
Of opportunities. Yes,
that's right.
It does.
You don't have to take a job just for benefits anymore. And that's important. I was a firm believer from the get-go that it was when I first went and got my insurance license, and you start looking about group insurance. I was like, why are we getting the employers to pay for this? It doesn't really make any sense to me. I mean, they don't cover my car insurance. They don't pay for my house insurance. It was always kind of like mind-boggling. I was like, it always makes more sense in the long run to actually own it on your own.
Well, again, the benefits of working with a team at Cover Cincy, they'll look at everything you've got. They'll look at every aspect of your life. They'll look at your family individually. They'll talk about your medical coverage, and then, of course, can make strong recommendations about life coverage. And, of course, it's more than just life insurance, as is explained today. Another plug for your website, that's Cover Cincy with a YRI, covercincy.com, 513-800-2255 to reach John and the team. What else we need to talk about in terms of life insurance, like the misconceptions that exist out there?
There's a lot. I mean, you'd be surprised how many times people think that death benefit is actually taxed. So most people don't realize that when your life insurance pays out, $500,000, that's not a taxable event. That's tax-free money to your beneficiary.
Right.
And that's huge. I mean, that is the strangest thing is like the number one thing that I hear is, well, that's $1 million, but I'm only getting $500,000.
Take half of it.
I was like, no, that's not how it works. I mean, it's a tax-free event. So it is a great way to transfer wealth if you really think about it that way to your family. I mean, that's a smart way for anyone to really leave money to your family and your kids and stuff like that. So
if you want to do that,
but it's sometimes very hard for me because I'm coming from an area where, yes, I know a lot about this. So I don't really see it sometimes from the eyes of everybody that I talk to. So before I did the show, I actually sat down with my wife. I go, listen, hon, I was like, why should you have life insurance? I mean, why? What would be like your keys of doing that? And she goes, because if anything ever happened to me, I would want our kids never to change their lifestyle.
Huh.
And I was like, that's very interesting because we still have younger kids. My oldest will be 18 this year, but my two younger ones are not even teenagers yet. And that's right. I mean, that's one of the things we actually haven't really even planned well for is like, what happens if we both pass away?
Yeah, well, you could both be on an airplane at the same time going on vacation.
We do that a lot. Or driving a car together, right?
My wife will rarely get on a motorcycle with me because it was when the kids were younger. She will now because they're both adults that feed themselves. But before it was like, no, because one of us needs to be here to raise a kid. So go out and have fun on your death machine there, and I'll take a pass.
And that was one of the things she mentioned. She goes, if something happened to both of us at the same time, I wanted to make sure that the life insurance that we had, and of course our secondary beneficiaries, where they would go to, would not change their lifestyle. So my daughter, that she has a huge $15,000 plus bill a year just for her competition dance, and we travel over the country for it. I don't want to change that for her. She just lost her parents. Why should she have to change everything else that she does? You know what I mean? And that was really something that hit me because I never thought about it on that end.
We see food for thought. That's why we have these discussions here, because someone out there is going, you know what? I never looked at it that way either. Well, that's the kind of conversation you got to have. Again, I always draw the parallel between you and a financial planner. So you're there on the insurance side of the equation. Of course, again, talking life insurance today as well.
Another thing too, Brian, just so you mention this too. One of the things I hear a lot from people is, "Oh, I'm good. I got that through my job," and don't count on that. You know, Sweets and Meats did it. That's great. I'm glad they offered that because those individuals didn't have it at all. But that's like, I call that icing on the cake. Like, you should have your own life insurance policy outside of work.
Oh,
right?
yes.
Absolutely.
Yes,
that's
yes.
important. Just think, hey, that's great. I might get another $50,000, $100,000. That might be really awesome for me. But you definitely need to make sure you have your own. That is probably the most important thing. Get your own policy. And then sit down and have a conversation, because there are some really unique products out there that might work better for you. We are really pushing a lot right now and helping clients that are self-employed that don't really look at options for retirement. They're like, I don't really do anything. I can't do a 401k. I make maybe too much money to do a Roth or an IRA. So a lot of these guys are starting to look at some of these unique life insurance policies, like the index for universal life policies, to start building up for retirement. And they can be really beneficial. And that's something we'd love to have a conversation with anybody that's interested in looking at those.
No kidding.
Mm-hmm.
Index universal life.
Mm-hmm.
And that's going to help them in retirement.
Yes. Basically, what we're doing is you're selling a life insurance policy. The goal would be to have a lower death benefit, and then you can overfund the investment account that's tied to it, and it's indexed to something like the S&P standard.
Okay, I got it.
And then so you're gonna have a guaranteed interest rate. It'll have a floor you can't lose money in it. And it's tied
unlike the market.
Yes.
I mean, so okay. See, I'm sitting here listening, and in my brain's churning, and I'm thinking, well, why wouldn't I just give that extra money to my financial planner to invest in the market? And the answer is, well, think COVID, and when the market lost quarter of its value in like a moment's time, or
so what happens when you take that money out later on in life?
It gets taxed at the current taxable rate on my income.
Right. IULs, we can show you how you don't have to pay taxes on that money.
No, and that's legal too.
That is legal.
You got an answer for everything, man. Got an answer for everything.
I mean, trust me, I wish I would have known what I know now 19 years ago when I first started. But yes.
I can say that for a variety of different topics, brother.
Every single time.
Can I be 58 years wise and just go back to like 18?
Oh, my God. That would be just unbelievable. A lot of things I wouldn't do.
A lot of things I would do.
That's true.
Got to parlay that knowledge and information to your advantage, brother.
That's right. A couple stocks I might have bought 20 years ago.
Well, yeah, really. Invested heavily in Apple. Anyhow, it's Cover Cincy with WireEye.com. Initiate the conversation by going there and just say, Tom, you need to talk to you about medical insurance, most assuredly medical. A component of that broader plan will be life, and he can go over all of these different options with you as well. And again, I just am still thinking about our conversation with Kristen from Sweets and Meats, and just the wonderful benefit that she has been able to provide her employees in that situation who would never, ever, ever have an option for medical insurance or dental insurance or even as the life insurance as we talk about. And it's just amazing.
And the best thing, Brian, is now that we've started having these conversations on the show, more and more small businesses are reaching out to us in that exact situation. They're like, listen, I have a small business. I got an architect that's listening to you up in Dayton. We're helping him now.
Cool.
And he's like, I got 9 employees. He goes, I just, budgetary, I don't really have a lot. I was like, well, just come up with a budget that you feel comfortable with for each employee, and I will build you a plan around that. And that's what we're doing right now. So it's taking off. So it's not, insurance doesn't have to be expensive. So, when you give us a call, just kind of have it in mind, like, hey, this is what I think I can afford per employee. And we'll have a conversation. I will show you exactly what a plan will look like around that budget.
It's amazing what you do, John. Always impressed. And I just, the way you treat your clients and what you do for them, I just think is absolutely wonderful. Your business ethic is just simply amazing. And the follow-up that your team provides and the service you continue to provide the people through whom they get insurance, it takes all the guesswork out of it. It takes all the concern out of it, too. Because, if you're not familiar with the insurance industry, you can get lost in the haze, and you're one call away from having all your problems solved and your questions answered. That's the team with Cover Cincy. CoverCincy.com, Y or I. This has been another edition of Rethink healthcare together with the spin on life insurance this morning. John, it's been a real interesting conversation, as it always is, and keep up the fantastic work, my friend.
Oh, you too. Thank you so much for everything.
My pleasure. 800 call 513-800-2255. That's his number.